Hello, and a really warm welcome to this, our very special Brisbane market update for Q2 2024. Now, Ironfish has built up a reputation for more than 18 years as helping people build borderless property investment portfolios around the major cities around Australia. And it's our pleasure to be able to bring you some really good data and insights about the Brisbane market. We hope they're of value to you. So today I'm going to be covering things like the economy. We'll look at supply and demand. We'll look at the rental market, capital growth outlook for 2024, and I'll also throw in a 2024 market talking point too. So let's get into it. Now, what we can see from the Brisbane market, the first thing we really want to look at is to zoom out and have a look at the economy. It's like the lifeblood, I suppose, of a property market, and that's what's actually happening in and around the Queensland economy, and in particular Brisbane. But what we can see in some of the data we get from the CommBank State of the States reports in 2024, you can see it's a pretty good scorecard here in relation to Queensland. Fastest wage growth, look at that, number one. This is going to attract more people. It's one of the reasons why population growth is so high. And the highest value of home loans, what we're seeing is it's actually number one nationally of all of the states for home loan activity growth. This shows that people are wanting to buy property. And you can see there, look at that, it's number three with population growth of 2.7%. It's absolutely incredible that such a high population growth rate only gets you to rank number three, because that 2.7% is incredibly high, and it's putting a lot of pressure on, certainly on accommodation and the property market in Brisbane and in Queensland. Now, when we look at the unemployment rate, the job market is an incredibly important part of an economy because it's what partly attracts people to move and flourish, move their families there and get jobs. And we can see here, look, there's still very high employee demand, over 51% above its 10-year average here in terms of employee demand. The unemployment rate, about 5%. That's obviously the 10-year rate is 5.7%, so we're still well under that, but certainly we've got a situation where there are jobs and people are moving to Queensland to get to them. Now, on the demand and the supply side, when it comes to demand, the primary demand is from new people needing to be housed, and that's really in relation to population growth, whether it's interstate or from overseas. We can see that pre-COVID, 85,000 people moved to Queensland. Post-COVID, 143,000. Look at that, 68% increase from pre-COVID to post-COVID. So whilst there wasn't as big a drop during the COVID period for Queensland because it had such strong interstate migration, but what we can see now is not only is the strong interstate migration, but you can see the yellow in that graph there, that's overseas migration. International migration is incredibly strong, and you can see that annual growth rate of 2.7%. Incredible. Now, with all of these new people moving here, they need somewhere to live. And at the same time, it's becoming harder to supply that property, and that's why we're calling it a supply crunch. Now, we can see that ability to supply property. We don't need the average. We actually need more than the average, but we're getting less. It's a 13% decline in the number of approvals compared to the 10-year average. And if we look at the apartment market, where it's really, really clear when you have a look at the graph here, literally 76% below the decade average in terms of launches. We've got the lowest level of commencements in a decade. And look at the number of completions here. Whilst there's a few more in 2024, we are nowhere near the amount that we need. And the phrase Chartercat Kramer, the research house, have used here is chronically undersupplied, and it's going to be chronically undersupplied for the next 2 to 3 years, which is not going to be a turnaround anytime soon. Our own data, when we're looking at, the average net completions for the last couple of years and looking at dwellings required, we're predicting at least a 31,000 home shortfall within the next 4 years. It's not good news unless you're a property owner or a property investor, in which case it's very good news. And we can see this play out in what we're calling the no vacancy phase, if you like. It's a rental market where vacancy rates are nowhere near their balanced level all around Australia, but in particular in Brisbane. Look at this, a balanced market is 3%, and look at this, Brisbane's at 1%. It's literally along the ocean floor here, and it's not a good situation, and that's why we're seeing rental increases. We can see there almost 7% for houses and almost 10% for units, but you've still got quite strong yields, and those yields are going to continue to increase. We can see over time, despite the growth which we're seeing in the market. And that's the thing we need to obviously have an eye on when we're investing in property, is what's the future growth? Yes, there's been past growth, but is it going to keep going? And certainly the data would suggest that it is. Median values, houses 909,000, units 587,000, almost 16% growth from March to March 23 to 24. What's really incredible though to think is if Oxford Economics' latest predictions are true, they're predicting 19% growth over the next 3 years in Brisbane for houses, 23% for units. That would take the median house price to 1.21 million and for units to 710,000. And this is one of the situations that many investors find themselves in. They're wondering, is this growth going to keep going? Well, the data is pretty compelling that it will. And we haven't even had the demand accelerator, if you like, which is interest rate cuts, which are imminent. The only question really is, are they going to be later this year or are they going to be early 2025? But whether it's 6 cuts, according to CBA, whether it's 5, according to Westpac and NAB, or whether it's just 3 from ANZ, if you kind of choose a midpoint number of about 4 interest rate cuts, that's a 1% interest rate cut is coming. And once that hits, we think it'll only be an accelerator. It's like pouring gasoline onto property prices. So I did want to talk, just before I give you the final scorecard, I just wanted to give you one talking point in relation to the Brisbane market. And, you know, it's a pretty exciting market, the Brisbane market. There's a lot going on. I could have chosen any number of things, but what I did want to choose is, let's talk about the Olympics. 2032, only 8 years to go. It's hard to believe that the years are just ticking by, and we're going to be at 2032 before you know it. But what there is, and it's very media hot topic, is there's a lot of talk about the Olympic Games stadium venue. First it was the Gabba, now it's not the Gabba. Obviously there was an independent Olympic review, and the government has rejected the recommendation of that review for the Gabba the rebuild to not proceed. They are going to agree with that, but they're not agreeing with the suggestion to move it to Victoria Park and build a brand new stadium. So they want to use existing venues, and whether that plays out, we'll wait and see. What we are waiting for is, in the middle of this year, there's going to be an independent authority for the 2032 games set up, and that's independent from government, and that will, we believe, once that's in place, that will start to create, I suppose, a surer pathway of what's exactly going to happen. Interestingly, the opposition have said that should they win the state election, they're going to go back to the Victoria Park option. So it'll be interesting if that's how things eventuate. But certainly one thing's for sure, guys, the Brisbane Olympics is yet another, as if the Brisbane market didn't need any more things to pull the market forward, it's another economic driver, and certainly something that's going to impact property prices over the next 8 years. Okay, so let's have a look now at our scorecard. Overall, Brisbane's got a very chronically undersupplied market. There simply is too much population growth. There's not enough homes being built, and we can't see that changing anytime soon. And that's going to mean, with such a low vacancy rate of only 1%, it's going to mean rents are going to continue to rise, and house and apartment prices are going to continue to rise too. Those capital growth forecasts, 19% for houses, 23% for apartments over the next 3 years. If that's true, you're going to have a median house price in Brisbane of $1.2 million. And that isn't even taking into account on the left-hand side there, the demand accelerator, if you like, which is an interest rate cut sort of scenario. Now, we hope this data and these insights have been valuable for you. We get great feedback from our customers, but what I would like to offer you for watching this is the chance to book your free PPA strategy session with one of our experienced strategists. Get yourself investment ready, find out what's possible. How can I build a portfolio of 4 properties outside of my home? Whether you're a first-time investor or experienced investor, you may want to access the best properties around Australia. Many of the opportunities that we present to our investors, and we've got over 13,000 families that invest with us around Australia, and many of these are off-market opportunities. So if you would like access to those, scan the QR code there, and when you do, book today, we'll give you a copy of our My City Brisbane 2024 edition, plus a 15-year investment plan when you sit down. Probably a worthy 30 minutes of your life. So thank you very much for tuning in. We hope this data and research has been of help to you, and we wish you every success investing in 2024.